Hey guys, Ryan Dement from Chasing Financial Freedom Podcast. I hope you guys are having a great day. On the podcast today is Daniel Martinez. He is an entrepreneur. He's a podcaster. He's a real estate investor. He also has a real estate platform that he does some tech with. Daniel, welcome to the show.
Man, it's exciting to be here, man. I love podcasting. It's really opened up my eyes to it, and I've enjoyed it ever since. So it's kind of my little passion project.
Cool. Tell listeners a little bit about yourself, and we'll get into your journey.
Man, I love telling people this because I'm originally a truck driver, so I'm a product of podcasting. That's why I contribute back to the content side of it. So I truck drove for 4 years. I used to load trucks too when I was younger. I just turned 30 this year, but I used to load trucks. Drove for 2 years. Ended up starting my own company. That was my first endeavor in entrepreneurship, was starting my own company. I got up to 5 trucks, ended up pivoting into real estate and software and podcasting. That's all I do now. It's really been a journey, and a lot of people think overnight success can take 5-10 years, man. That's how it is, man. You just got to put in the work, and something will happen along the way.
And you know what? It's I always joke I'm an 8-year overnight success because that's just how it happens. It doesn't happen. Yeah. It doesn't happen, 2 days from Tuesday or whatever the case is. People don't realize hard work gets you somewhere, but you've got to grind it out.
Oh yeah, for sure. It's hard work too, man. It's a lot of struggling, a lot of patience with your family, patience with yourself. You have to come through a lot of ups and downs personally, through a lot of different things. So it's an exciting trip, but I really wouldn't change it for the world.
And my mom asked me this question. Every year, without a doubt, would I go back to my W-2 job? And I always tell her no, because the struggles I've gone through and the learnings that I've gone through are priceless. And corporate America never taught me how to fish. It taught me how to be fed every 2 weeks, and that's it. Never taught me how to grow as a person.
Yeah, entrepreneurship, man. It's been a journey. Like I struggled a lot in the beginning, just because it's a whole new endeavor. But I think the one thing that separates a lot of entrepreneurs from everybody else is consistency. There's people that they have the entrepreneurship bug, but they never start, and 2, they're never consistent, and that's what separates everybody else.
And that is what separates. Yeah, you're right. If you're working a W-2 job versus you being an entrepreneur, if you're not consistent, persistent, and get back up every time you get knocked down, you're going to eat your lunch and you're going to be done.
Mm-hmm. Go ahead.
No, go ahead.
I went into trucking first, and I've seen so many people go into trucking and like entrepreneurship side of trucking, and like they get wiped out within 30 to 60 days, and it's a rough. So you always got to choose what direction you go into if you're going down the entrepreneurship path, because whatever direction you can take sometimes is more money intensive. It can wipe you out quicker. So
what drew you to trucking initially?
I was loading trucks at the time for my W-2, and I ended up, I was living in Chicago at the time, originally from Chicago. I used to work outside loading trucks with the forklift and stuff like that. So weather's terrible. And my wife's like, "You want to move to Atlanta?" I'm like, "Let's go. I'm ready." Cause I lived my whole life in Chicago. I'm like, I'm looking for better weather, a new start. And for all the young people listening out there, leaving home is a hack because it puts you in an environment to grow. And when you do that earlier, it kind of pushes you to grow into the adult you want to be. Because in my lower 20s, I didn't know what I was going to do. You kind of live in life, and by the seat of your pants, you get a job, pay the bills, and you kind of move along something. But leaving home early, it forces you an environment to grow, and I recommend that to all young people. But ended up moving to Atlanta, and when I got to Atlanta, I'm like, "There's no snow down here." I'm like, I can drive, and that was one of my biggest fears of truck driving was snow. So I'm like, truck driving, kind of went down that path. And then I enjoyed truck driving. The only part I did not enjoy was being away from my wife and my kids. And that's why I ended up quitting. But I really enjoyed truck driving. I kind of miss it a little bit sometimes, but it's one of those things where like, I'll never go back to it just because I found a better way.
And you found something that sounds like you're really passionate about, and that's you monetized it. And that's the biggest thing, is you find something you're good at or you're passionate about, or both, and you monetize it. And it sounds like that's what you did, and that's where you're supposed to be.
And that's it, man. If you find your passion, and it doesn't no longer becomes work anymore. It becomes almost like fun. There's some set of enjoyment about what you do. And I really didn't have that in trucking as a whole. It was just kind of a thing that I had a CDL. Let me go truck drive, and I was just one of those things. But real estate, trucking, softwares. I mean, the real estate software and podcasting have really changed my passion now, and I really devote a lot of time towards it just because I'm a product of it. So I like giving back to the community.
That's awesome. So with trucking, and you got out, what springboarded you? So how did that transition look like? Did you just cold turkey give up trucking, or did you have like a side hustle or something going on while you were still trucking?
So while I was trucking is, and this is when you get into business, there's different profit margins. Trucking is very, very money intensive. The biggest companies that are publicly traded on the stock market, they operate on a 1% margin.
Wow.
Which is crazy.
I didn't even know that. I had no clue.
It's crazy. And like the good trucking companies, they operate off a 3% margin. But most of them are 1% or less. And it's crazy. Like, it's nuts to me. Like, how does that even qualify as a business? But they're publicly traded. They're worth billions of dollars, and they're literally operating off a 1% profit margin. So when I got into trucking, I didn't know that. And I realized really quick that it was money intensive. I mean, as a small company, you kind of start at like 8 to 10% profit margin, and then it goes down from there. I ended up, I did that for 2 years. We grossed over $500,000, and I lost $100,000.
Wow.
And it was a lesson. It was a lesson. So in that time, like, I was talking to one of my partners, and he was like, in entrepreneurship, you have to go all in, or else you'll have that regret that you didn't go all in. So I took trucking till the very, very end, got wiped out, just like a lot of people did. A lot of people doing trucking. So many trucking companies get wiped out in like 30, 60 days. It took me 2 years to get wiped out. I finally got wiped out. And during that end times, I was trying to pivot, and there's no such thing as pivoting. It's like transitioning. It's not like a hard pivot. It's always a transition. So I was doing real estate at the same time I was doing trucking, and kind of pivoted into real estate. And that's how I kind of softened out of trucking and started doing real estate stuff.
What were you doing in real estate during the time?
So anybody who's new to real estate, you can actually get into real estate with no cash, no credit. You just got to go negotiate your own deal. So there's gray areas, not necessarily that they're bad, but there's gray areas. So like everybody thinks every real estate transaction goes through real estate agents, and that's just not true. There's investors that go directly to homeowners to negotiate their own deals, and that's how they make money. So you always hear about investors not making money, and Robert Kiyosaki and all this stuff. The reason why they do that is they go directly to homeowners, and in most cases, or they hunt for deals. So if you hunt for deals and you're always hunting for good deals, you're not going to lose money, and you're always able to find a good deal no matter what. Whereas in trucking, you're kind of capped out by the hours you work, and you're still kind of like an employee. Real estate is open because you can get one good deal that'll make you six figures just by negotiating with it or finding somebody at the right time, and you'll make a ton of money.
So were you fixing and flipping? Were you?
No, this is basic. Everybody that wants to get into real estate, look up wholesale real estate. All it is you're signing paperwork. So you find Ryan here, you have a property for $100,000. Hey, would you sell it to me for 75? Sign for 75. You sign that paperwork to another buyer for 80, 85, and you make your money. That's it. It's assignment contracts. All contracts are assignable in the United States unless they say they're not, if you didn't know that. So it's one of those things where you kind of get property in the contract and you assign it to end buyers or investors, and then they buy it and you make some money. Cash.
So then how long did you do that?
I still do it now. That's something I do on the side right now. So I have a property in Atlanta. I do stuff in Texas, and I live in California. That's just another stuff I do.
How is that? And how's the market going?
So us as investors, just like traders in the market, if you understand the information, understand the knowledge, you can make money in every turn, up, down, sideways. You can find ways to make money. So there's strategies you can use depending on it's up, strategy you can use if it's level, strategy you can use if it's down. So right now we're trying to get out of everything that we have, like especially like flips and stuff like that. It's more of just, I think the downturn's coming, so we're trying to get cash heavy so we can capitalize on stuff.
It's correcting, especially in the hotter markets. I mean, out here in Arizona, some of the new home builders like Toll Brothers, just in my neighborhood, close to my neighborhood, released some of their houses, and they had $100,000 price reduction. That's pretty big. So that just tells you. But you've got, I do this with my videos, but you have this X here. You got price demand, and then you've got interest demand or mortgage demand, and those two have to meet, and they're not meeting right now. So that's why, if I remember right, I saw an article that the new Home Builders Association CEO came out and said 25 or 24% of contracts are being canceled right now. That's like, I think he said it was 3 times higher than what it normally is. Yeah. And that's because they have escalator clauses in there, and they're jacking up the prices even further, even though materials and lumber are down and settled in May, they're still jacking up prices. So they're just taking the greed on and going. And now you've got people slowing down. Out here, you couldn't get trades to come do anything for you. Now all of a sudden they're knocking on your door saying, "Hey, we're starting to slow down. We want business." It's cyclical.
It's the ebb and flow of business and capitalism. And it's not saying capitalism is a bad thing. It's just that it ebbs and flows. There's ups and downs. And people, when it's up, they're just there to capitalize, and they know the downturn's coming. So they're going to capitalize as much as they can in that downtime.
Yeah, just out here, at least in Arizona, it got pretty bad to where it's just greedy. I mean, everything went up. I mean, if you breathe the wrong way, it went up. I mean, it was crazy. I mean, I joke about it, but it is. I mean, pavers, concrete. I mean, everything doubled and tripled overnight, and it's for what reason? No one can really tell you why.
I mean, the inflation has gone high up too, so everybody's dealing with inflation. I mean, I'm sure you felt it at the gas pump, you felt it at the grocery store. You're feeling it everywhere now, even as a consumer by regular everyday goods. So it's coming across a lot of different directions.
Oh yeah, I mean, but part of this was, unfortunately, there's some greed in this. I mean, if you look at margins, looks at numbers, that's just what it is, and I get it. Yeah, but it's the end of the day, it's business, and I get it, and it's either I choose to do business with them or I don't, and that's just life. I mean, some trades that I do business with, they almost doubled in price overnight, and I said, forget it. I'm not going to pay double just because you want to raise your prices for no reason. I asked them for a justifiable reason, and they said, "Oh, I can just raise my prices because it just costs more." Okay, I can do no business with you then, and that's kind of where we went. And it's just, I get, like you, I've got to make money. Everyone's got to make money, but at what expense do you decide that you're going to make money? Are you going to do it with a greed factor in there, or are you actually going to, okay, I got to raise my prices to cover my costs and keep my margin? But then when it swings back around, like you said, ebb and flow. There's certain places in the United States that we do business right now to where the ebb is already in place and people are begging for work, and all of a sudden their prices have come down 30, 40, and 50%. Out here, we haven't seen it in Arizona yet, but you're starting to see people slow down to where they're starting to reach out and say, "Hey, I can come out and do that work for you now. Oh, I've already got it done by somebody else." So it's different markets, different things, but it's business. And that's what I really want to get to, is like business of how do you treat your customers? How do you do your pricing? I mean, those type of things, those are healthy conversations to have, because you have to watch the bottom line.
Yeah. Yeah. It's a struggle. It's a struggle for a lot of businesses. I'm not saying everybody's in it for the wrong reasons. It's just that, let's say a concrete company, they probably have to pay more for all their materials. So it's coming through in a lot of different ways, and a lot of people aren't excited about it, but it's hard. I think there's definitely people capitalizing, but I don't think it's the small businesses. And
it is. Most of these guys that we do business with across the country are unfortunately larger, and I've gotten to the point where I'm trying to get to a smaller. but those smaller guys can't scale with me when I need to have to scale. When I need to have four foundations poured at a time, they can't do that. So I have to be able to find a mixture of the two and be able to make it work. And it's business. I get it. It's just, I like to ask the question, hey, why did your prices double overnight? What happened? Did I miss something? You know, and people take that personally, I guess, but it would be like me saying I have to double my prices of my houses that I'm selling. I haven't. I've only passed along those costs that have been thrown at me from lumber from one point, materials when it came to plumbing or HVAC stuff that I had to pay extra for. I did that. I'm not going to eat the cost. I'm a for-profit. I get that, but I didn't double my prices. So that's where I like to have the business conversation or philosophical, you know, why double it?
So here's where the line comes, is that somebody it's supply and demand. So when supply is high, everybody's fighting for business. When demand is high, they can raise their prices because now they might be able to, let's say it's a 4-man team, they can handle 160 hours of work. If they keep their prices where they're at, they're going to be built up out for 6 months, whatever, 3 months, whatever that time frame is, depending on their trade. But if they raise their prices, it keeps them busy, but not so busy where they can actually support high-paying customers first and still make a larger profit margin because the demand's there.
Well, yeah, that's just basic economics 101. But there's a certain point in time where you have too much in price increase, and your demand's going to do this, and that's where we're at right now. Because you don't, from the businesses I run, I can never pass double my costs on to anybody and expect myself to stay in business. That's where I'm trying to get at, is because ultimately, let's say I'm a plumber. I double my prices overnight. Why? Okay, you've got some additional costs. We're back to that same thing. Is this guy is he or she being greedy, or is it just because they know that they're in demand, they're just going to raise the prices and then see what happens? But then when things slow down, guess what you're going to have to do? You got to come back and eat crow and change your prices, because you're not going to get customers at that double the price.
I think it's going to be different on every niche specifically. I think it's going to be different in every niche specifically. But the other side of it is, if you're in a specialized niche, if you double your prices, you can do less the work. You know, half less the work for whatever.
Oh yeah, I got it.
I don't know. It's a hard conversation because every business is different, and every business demand is locally based if there are local trades like that. So it's going to be completely different.
I totally agree. But it's micro versus macro economics. I mean, it boils down to, is you said it's supply and demand, but there's only so much demand you're going to get when you double and triple your prices. It doesn't matter how hot a market is. People will not continue to pay until you double and triple your prices, just for the simple fact they know they're getting ripped off. So you have to it's a balancing act with the business. And when I say ripped off, I shouldn't probably go that far. I should probably say it's more in the realm of you're overpaying. It's close. I mean, let's get out of houses. Let's get into another thing that I love: cars. Used cars in the last 24 months are up 38%. I have people that come to me in my private coaching group that are paying 40 and 50% above MSRP. Do you know what the difference between sticker and MSRP on a car is?
Yeah, it's the build the dealer's putting in, because they have so much.
MSRP is manufacturer suggested retail price, and then sticker is what the actual dealer's trying to sell it for. And then there's a delta in between, and then there's back a book, and there's back a sticker. There's a lot of different levels at that. And these people are paying above MSRP. So that means you're paying anywhere between 120 and 140% above what the car is actually worth. So guess what's happened? They've created a secondary market. Now there's a secondary market for seconds on cars, and it's just past $2.5 billion in assets. So people can't get financing for their first. So they get financing for their first, but they're short. So you have gap. So then what do they have to do? They either have to come up the extra money down payment, or they got to get a second on their car. So they're out 60 months on their car on that payment, and now they get a second on their car. So some of these guys are walking away, guys and girls, I keep on saying that, walking away with $1,500 a month in car payments.
Wow.
On a Toyota. And I'm not downplaying, I'm not downplaying Toyotas. And the most common one that comes to me is the 4Runner or a Tacoma. Those are between $50,000 and $60,000 units, and they're paying $1,500 a month, more than my mortgage on a monthly basis for a depreciating asset that if you get it repossessed, you're in the hole significant amount of money, and it's going to hurt you for a long time. And it just doesn't make sense because it's FOMO, fear of missing out.
That's insane to me. That's literally insane to me that people are getting seconds on cars. But I mean,
the funny thing is, in my other life prior to this, I bought defaulted credit cards. So they'd be charged off. I buy them, and then I would attach an asset to them, and then I would sue them. And when I sued them, I attached against their property, real property. So they couldn't sell that house until they paid me. And now individuals are starting to buy these secondary notes on these cars so they can lien the car itself and then try to move into first position like you would do in real estate. I'm starting to see this trend, and I hear people talking about it, and I'm like, man, you guys are either crazy or crazy smart, and I just don't know which one it is, because ultimately in a car, just like a real estate or a hard asset, they have to call the first due. It works similarly. So guess what they're going to have to do? They're going to have to pony up to get that car so they can get first position and get the car. And I'm thinking, what are you trying to do? And I haven't got that answer yet. It's a very interesting concept.
They're better off doing that in real estate. If they understand that in cars, they're better off doing that in real estate. I literally did a podcast with a guest last week, and he was talking about buying judgments and liens and positions and all that stuff. So there's definitely, it works the same way in real estate, but it's just having the knowledge and information, not necessarily capitalize, but knowing where it's going to make money, because people are going to do what they're going to do, and there's millions of people out there, and sometimes you can help prevent them going through situations. So like a lot of what we do as investors is we prevent people from going through foreclosures, because foreclosure can mess them up for 7 to 10 years, just like a repo can. They're not gonna be able to get a car if they got a repo on them for probably 3 to 5 years. And it's just one of those things where if people are gonna do what they're gonna do, and you can help prevent some sort of that action, there's always money to be made.
Yeah, and that's the secondary market we play in on the real estate side. Instead of them going to foreclosure, the lender or credit union, whoever, they sell it in the secondary market, and we buy the mortgages, and they're bought for pennies on the dollar. So that's interesting, because you're dealing with the front end, and I can't say I really like dealing with the homeowner, just for the simple fact it's an emotional transaction for them, and I'm not looking to make 100%. An emotional transaction. I rather just make dollars and cents out of it, and then come back through on the back end and work through our servicing company to be able to work with them to stay in the home. Because at that point, we're the lender. So we get to be able to make all those decisions that a lender would be. And there's 12 different exit strategies we can get out of these properties. And it's so much easier to work with them just to tell them, hey, we're family owned and operated. We're veteran owned. We're here to work with you. But if you can't work with us, there's 2 options, unfortunately, foreclosure or deed in lieu. So let's figure it out and then go from there. And it just makes life so much easier. But that business for us is slowing down because the pandemic has changed everything. Pre-pandemic, 80% of people we could keep in the house, help them get through, sell it out in the tertiary market once we rehab the loan after 12 months. Now it's a crapshoot. It's 50-50. Most of these loans that are coming through today haven't paid in 18 to 24 months, sometimes longer. And they live a lifestyle that is high on the hog and don't feel like they need to pay their mortgage, and they're waiting for Uncle Sam to pay it. So you have a 50-50 shot, and more than likely it's going to be foreclosure. And we're not in the business of foreclosure because it just eats up time, effort, and money. So we're slowing down on that and seeing where it goes. But right now, what's coming through the pipe from all the major players are the leftovers from the forbearance and what did they call it? Oh my gosh, it'll come to me. But yeah, they're just
refinances and the forbearances.
Yeah, just all it's all the forbearances that have been sitting out there for 24 months that are left over. There's still 500,000 that are sitting there, and a major chunk of those will go to foreclosure, and then some will be sold in the secondary market. But that market has been turned upside down.
That's crazy. I didn't know you're in the note space. That's interesting. Yeah, we're on the front line. We're on the front line of the other side.
I'm the guy in the back. I don't like the front line. It's never been that way. We do private lending also, so we do private mortgages. So there's all types of stuff we do on the back end. But I like non-performing notes. But it's just hard to find some good ones nowadays, and it's taken up so much time and effort because what you see today in the market is not what the market has been for the last 10 years that we've been doing that. So it's been it's changing. It's tough.
So you're on, yeah, we do a lot of like, we'll take over the property subject to, and then sell it on a wrap or something like that. So that's what I do.
I got to ask, have you been sued yet?
No, I haven't.
It's an exhilarating experience. Been there, done that.
Oh, I've been sued for other things, but not for that.
If you're doing enough of them, I hate to break the bad news, you'll get sued by a lender.
Oh yeah, and that's the nature of the business, man. When you get in business, man, especially lately, you're gonna get sued by somebody. Somebody's gonna sue you. Somebody will, no matter what you're doing. Just be ready for it. And that's one thing we're at. Like, there's always gonna be somebody out there. I've been sued once, and I'm like, now that I've been sued, I'm kind of like a little bit more. I mean, I'm kind of prepared for it, but after that, when that first one comes, you're like, you get served something. I'm like, man, this sucks.
Yeah, it definitely sucks, and it changes, but you just have to be prepared, and all you can do is the right thing, and then you move forward. I mean, there's nothing else you can do. But the subject twos and the wraparounds, I mean, I don't know how many lenders are calling them due nowadays, but I know it's out there just in different states, and I've heard some horror stories about them, and it's like, hey man, that's part of doing business. If you decide to do that, God bless you. It's a risk you got to take.
Yeah, I've heard there's even like insurance now that you can get that as long as you cash flow positive, they'll refinance you out.
Yeah, it's so hard. When I say so hard, it's just rates are. I mean, the 10-year Treasury note just passed 3.3 while we were talking. It's like, man, it's coming. I mean, it's coming. So there's going to be a lot of change in the market, and you're going to see a lot of people try to liquidate or try to stack the market. I don't know if you're seeing listings in your area above norms, but out here, I think we've saw a 25 or 28% increase in house listings. And majority of them are, unfortunately, from what I thought, are the hedge funds listing their rental properties because they're not going to get those ROIs anymore because rents are not going to be what they are. So they're dumping those properties while they can at what they think is the top of the market, which out here is starting to peak. And now we got too many houses sitting. So now you got an influx of houses.
It's real estate thing is an interesting space to be in and it varies in market, but it's always interesting to see how people respond to different. I think the stock market tanked this morning.
Still is.
It's just one of those things. It's just one of those things where like you always have to feel what's going on, but always have an exit plan. Have funds set aside already to get sued. There's hardship in every business. There's no perfect business that doesn't have any issues.
No, not at all. And it's all about how you take it and where you go. I mean, I guess that could be a really good topic to talk to you about next. And let's get into that what are some major heartburns that you've done that you've experienced in business, and how have you overcome them?
Oh man, that is a loaded question. Man, I've been dealing with cheap customers, so I've been wanting to charge more because it's been a heartache fighting people with tooth and nail over a dollar when there's high paying clients that are willing to pay for your services that appreciate them. So that's one of the businesses I've been fighting. So we're coming out with new pricing to provide more value for our price point, and that's the angle we're pushing. And I've had to deal with that recently. Another one was just finding your niche and who your target audience is. I feel it's always a struggle for some businesses because you don't know exactly who you're. So it's hard to find your avatar when you first start off because you don't know exactly who your customer is. So you're kind of just out there, and finding your customer is very important. And serving that customer is more important too, because once you find and serve that customer, then you're kind of in the zone at that point. So finding your customer, finding the right customer, has definitely been a struggle. Because finding customers can be easy, but finding the right customer, that's another difficult.
And I guess this is universal because I talked to a lot of people, and it seems like it is. But it's when you first start acquiring those customers, you feel like you need those customers more than they need you. And once you get to the point of they need you or they need you more than you need them, is when you start finding the right customers.
And I would definitely agree with that. Because now I'm like, I don't even fight customers that leave because I'm like, it wasn't a fit either way. So they can be gone. And I know that it gives me capacity to handle the right customer. So I'm not fighting customers.
And again, you're right. You know, if you need to raise your prices and make you start working smarter, not harder, all for it. I agree. You want to match the right people or the right customers with your brand and what you're doing. Totally agree. Me personally, I always struggle when someone says I'm raising my price 2 or 3-fold and can't tell you why. When I say why is like, okay, I've got overhead costs, whatever the case is. I'm not looking for an explanation and knowing your numbers, but that's to me is greed. And that's kind of where I draw the line is if I have to go out and tell my coaching clients that I'm charging another $75 an hour, but I tell them why, okay, I'm good. But I don't just charge it because I charge it. That's where I'm at.
No, definitely with our price charging increasing, we're definitely providing more value. And it's the part where people struggle with the most. So by charging for it up front, we can kind of increase that trend of getting customers into traction quicker.
And does that allow you also to find better people or retain better talent?
Yes. I mean, I think the CEO of Airbnb, he's like, we're switching to, because everybody's trying to get their employees back in the office, and Airbnb is like, we're not going to do that. And they made a article I read recently is like, we're going abroad, and the reason why we're going abroad is because people don't have to work locally anymore. And there's talent out there, and their talent's abroad. Not saying there's not talent locally, but you can find more talent abroad than you can locally, or making people move locally to your company. So they're going to a model where they can find outside talent, and the reason why is because they can pay them more. And people, you can pay them what they're. If you pay people what they're worth, they're going to do the job they're going to do the job way more than what they're worth. What they're actually doing. So the whole thing about hiring employees is that usually if you pay an employee $50,000, they should be bringing in revenue, $150,000, $200,000 in revenue.
Yep,
that's what an employee should do. They should be making a profit in your business. So if they're not making a profit, they're not the right employee for that position. It's just what it is.
100%. I mean, we'd always joke about it when I had an agency, a collection agency. You got to 2 or 3-fold your salary. So if you're making $30,000 a year, I mean, you need to be bringing in $90,000 to $100,000 in revenue, and that's just straight up covering all the costs and having profit in there. And you'd be amazed how many small business owners, entrepreneurs don't look at that, and they wonder why their bottom line is what it is.
And it's something that I didn't realize as an employee either. Like, as an employee, you're supposed to bring in that much revenue too, because that's what sustains a business. If you don't do that, you're the hindrance that's going to take that business to zero eventually. And you're going to be wondering where you're going to work. It's because you didn't work.
if there was more individuals like yourself that thought about that way, I think that way, then you'd probably have a lot more successful, not just businesses, but the symbiotic relationship between employer and employee and them understanding that.
And like I said, I didn't know that. I mean, for me, I was just a hard worker by nature, and I always did a good job. I always did my best. Because it passed the time. When I was busy, that's when the day went by so fast. So I was already a good worker. The problem is that when I transitioned to an ownership and boss and CEO, now it's hard to find somebody that works as hard as I did or works as hard as I do as general right now, just because there's passion in there. Even when I was an employee, there was still passion there that I always wanted to do the best work. So it's hard finding and resonating with that passion. So you almost have to pay high. You have to pay high wages, provide benefits, and that's how you're going to find the best employees, because they might understand that part of it and they know what their worth is, but they might need a boss. Not saying not everybody can be a CEO or a boss. It is not easy. It is not easy for everybody else. Like, being an employee might be the best position for you, but you always want to make sure your worth is. So if you find a good company that understands what your worth is, they're going to pay you what you're worth. You bring in the revenue, they pay you what you're worth. And it's not necessarily a greed employer-employee relationship. It's a symbiotic relationship because you found the right person for the right position. And I think that's where business accelerates and it kind of hones in onto the next level.
And that's where you can scale your business too. That's huge. I like that. So go ahead.
No, I was going to say that I didn't learn this yesterday. I've learned this over the past my years of growing, man. It's been a journey, man. Definitely been a journey. I've learned a lot.
And you probably had a lot of those days where you ate peanut butter and jelly like I did.
Man, I'm still eating it sometimes to this day because I like it.
That's me. I have no problem saying I do. My dog eats, like filet mignon, and I eat peanut butter and jelly. So I always joke, and when I say joke, I'm almost serious. I'm serious too. I will make sure my family is taken care of before I am. Period. Because they've already sacrificed a lot already for me. So if something has to go without, it's me, not them.
And that's what separates good CEOs and owners versus everybody else. Because I think what makes good business is the CEO, because the CEO is the driving force of the whole business. And I told my employees this because I'm like, you don't understand. Like, I go without pay. That way you can eat and take care of your family. I provide benefits, and there's sometimes I don't even get that same benefit for myself. So I sometimes have to relay that to my employees, because, and this is when I was struggling, like, after that to my employees, because like there's things that I give you that I don't even give myself because I'm the CEO.
And that's how it should be. I mean, that you're doing all the right things, and that's the right thing to do. Is us as entrepreneurs, unfortunately, we're last to the party when it comes to pay, because we want to see the business grow, and we're putting all of our resources into the business to grow and scale, and then it takes off, and then that's just part of our pay, and then boom, here you go. I mean, it's a great feeling. I know what you're talking about. I truly do.
The other thing is that when you transition from employer to employee, you now have to take responsibility for them and their family. So you have to provide the work, make sure they have work to do to get paid, and make sure they have a livable wage to take care of their family. And then it's what else can I do to hire more employees, grow the business, and then you're always reinvesting your profits. And like I hate the employee side that, like, oh, my boss makes all the money, and I'm like, he sacrificed years, tears, lunches, peanut butter and jellies for 5 to 10 years guaranteed, and now he has a Lambo. So I think he earned it.
A lot of people don't realize it takes 3 to 5 years before you really start seeing the rewards that you've put all in, and it's not overnight success.
It's not, man. I was most businesses fail within 2 years, and I was so pissed off because I didn't want to be a statistic, and my trucking business failed at 23 months, and I was so pissed off about that, because it was one of those things, like, I ended up being part of the statistic and failing within my first 2 years. And it's just one of those things where, like, I sacrificed literally for 2 years trying to build that business and for it to crumble right below my feet. And it's just, a lot of people don't want to take that risk, and that's what separates me from you. And I provide a product and service to the community, and there's a joy that I get from that. And it's not for everyone. And if you are like me, come on board. If you're not,
go elsewhere.
Go elsewhere and find a good employer that understands who you are and your benefits and value that you bring. I always say this in truck. This is something I tell people all the time. Like, I used to talk to truck drivers and they'd be like, yeah, I got 20 years experience. And I'm like, your 20 years experience is the same year over and over again for 20 years. You only have 1 year.
That's interesting. That's a good way to look at it.
Because they have the same thing. They never experienced anything because they literally did the same job every year after year for 20 years. You have 1 year experience in my opinion. And people that, like, for me, like, I've done something new every year that's pretty much since I've been employed. I did sales, door to door, trucking, loaded trucks, truck driving, ownership of trucks, managing trucks. Now I do real estate, software. I've really grown every year that I've been in, as every year I've been working. So I really have a lot of experience through the path that I've taken. Whereas people that they go to a sales job, and I've been in sales for 20 years. I'm like, no, you got the same year of sales over and over again. Because the price just changed.
I like that. That's a good way to look at it. That'll get people to change and get out of their comfort zones. I like that.
It is, man. And you really grow as a person when you stretch. Just like working out. When you stretch that muscle, that's when you get stronger. So if you're at sales, try selling cars 1 year, try selling insurance the next year, try selling a lot of different variety. Start selling real estate. You'll see and expand your strength of sales by talking to different types of customers with different types of motivations, different type of needs, and you will become a better salesman. That's what you're trying to do.
Love it. I like it. I love it. Daniel, where could the listeners get a hold of you if they want to reach out to you?
So we have a Facebook group, Hivemind CRM on Facebook. I actually do software. I do real estate. We have a business automation software, the podcast, a lot of that stuff. We're on YouTube, Instagram. We're on all the social media platforms. I provide as much value as I can from the experience that I've learned throughout my years. And you can take it or leave it. You can. There's something I always say is that. You build your infamy off the content you produce. So if you want to make a difference, start producing content. The other thing is that if you want to make an impact, it's going to take a lot of consistency. A lot of consistency.
Yes, it does. Lots.
And it's just, if everybody out there trying to make a change, let them, support them, and help them, because there's not very many there's not very many people out there trying to make a change. So find somebody to resonate with and provide.
That's awesome. Well, I'll put in the show notes your website and your Facebook group, so we have all that in there, so we can share that across the platforms.
You cut out.
Oh, sorry. I'll make sure your information is put in the show notes so we can share it across all the platforms.
Man, I appreciate the conversation, man. We talked about a lot of different stuff, and I like podcasting because it brings up varying conversations. So I appreciate the conversation, man, and I appreciate the influence and the platform you provide to your listeners, and I hope they found value in that.
Thanks for coming on. It was a great conversation. You shared some great stories and some great insight. And I hope the listeners really do listen to this more than once, because there's some good nuggets in there that you've actually shared that also, if they're still working their 9-to-5 or W-2, they can learn from and expand and grow. I'm really glad you said that. I have one little thing. There's something that happens that sometimes you're not ready to receive a certain message. So if you listen to it down the line, you might understand it and resonate with it more because you've kind of grown as you progress. So sometimes if it didn't resonate with you, it might not be your fault. It's just you have to grow to a certain point to resonate with it. And it's just one of those things where
I have to go back and listen to sometimes conversation myself, because I'm like, man, that was such a conversation that I wasn't even ready for, but I'm glad I had it, because now I can replay it in my mind, and I'm catching more stuff in my head that I wasn't even ready to receive, but now I'm ready to receive because I've grown.
It's amazing what happens, right? When you open yourself up and it actually starts resonating with you, or you hear it and now you're ingesting it. So now you can make those changes or learn from it.
100%, man. 100%.
Awesome.
Everybody make an impact, and just be consistent, man.
Thank you, sir, for coming on.
You're welcome, man. Have a good one.
You too.